Hello, everyone. Welcome back to another episode of Signal or Noise. This is episode 44. Charlie Bilello here, and with me, as always, Peter Mallouk. Peter, two topics today. Number one, we got to talk about DOGE. We're getting a million questions. I just broke out 5 here for us to discuss. We can't cover everything, but we'll do our best. And we'll end, as we always do, with Signal or Noise. Quickest signal, I think, in history for us. The meme coin update we're going to give. It's flipped pretty quickly here, and we'll try to answer this question. Is diversification back? I mean, finally. So it'll be a fun episode, but let's dig in here with Doge. 5 questions. Question number 1, is there broad support? And I think this is a pretty important one, and this was a Harvard Harris poll that just came out. Just simply looking at, do people think this is a big issue? Like, do people think the deficit and the debt, we need to do something about it? And I was pretty surprised by the results. It seems like most people say we were on an unsustainable path. 67% saying the debt level is unsustainable, and actually 83% in this poll actually said we should try to move to actually balance the budget instead of running big deficits. Does that surprise you, Peter?
It surprises me a little bit, and I love it, because I think that the single biggest threat to the future of the United States is not a nuclear war or any kind of war. It's not, it's not a subversion, and a political subversion in other ways. It is the collapse of the economy because of unsustainable debt. This is a real existential threat to the United States, and it's great to see that people understand that. It's also incredibly inflationary. Without getting into an economics class, it's very, very bad for working class Americans, for the United States to have a lot of debt. It really diminishes the value of the dollar and through a lot of different ways, which creates further social divide. And so I think it's great that people want to find a way to a more balanced, or any kind of semblance of a balanced budget.
Yeah, absolutely. And I guess the surprising thing is just it's across both sides. 76% of Democrats, 92% of Republicans saying we should try to balance the budget. And the interesting thing, Peter, and you and I have discussed this, and we've shown a lot of charts on this, is it a taxation problem or is it a spending problem? There seems to be broad consensus there as well that it really is a spending problem. We've talked about the tax revenue today is actually 60% higher than a decade ago. The problem is spending has almost doubled over that period of time. And once again, here we're seeing 83% say we need to reduce government spending, only 17% saying we should try to balance the budget through increasing taxes.
I think I think this part gets politicized, and gets, the debate around this gets, I think, off the path a little bit. Because what happens is it turns into a discussion of, is the tax code fair? That's a whole different conversation that needs to be had.
Yep.
But even if you made it perfectly fair, if everyone could agree the tax code's perfectly fair, you don't solve the problem. If you take 100% of Elon Musk's money and Jeff Bezos' money and all that, is it fair what they pay, don't pay? Different discussion. But if you took all their money, just made the tax 100% of everything you own, we can't solve the problem. And you can't solve the problem because when you spend more than you bring in on an ongoing basis, it doesn't work, right? And you can't, it's too big of a debt. There's too much that's paid just in interest to solve it with taxes alone. There has to be some kind of change in the spending. That's the only solution. There's not a political statement. There's no other solution. Separately, you could address tax policy, but you can't solve this problem without looking at this and saying, we're spending more than we're taking. It's just that simple. Think about a credit card in a household. You can take all the earnings from the owner of the household, but if the debt payments are more than that, you're not going to get anywhere. It's a spending problem first. That's the part that needs to be fixed. It's great to see that most Americans understand that.
Yeah. So if it's a spending problem, obviously, then you have to look at where we're spending. And once again, we're seeing 77% saying, let's have a full examination of government expenditures. And that seems like a reasonable thing to do. If we're spending $7 trillion a year, let's know where that's being spent. And let's cut, starting with the low hanging fruit being the waste, the fraud, and abuse. And a lot of people think that there's a reasonable amount of that. Let's say 70% of people saying that government expenditures are filled with this waste, fraud, and abuse. And there seems to be pretty broad support for cutting at least $1 trillion in terms of government expenditures. It seems like a big amount. It is a big amount, but we've added more than that just over the past few years. And of course, we're finding now with this creation of DOGE many examples of waste, fraud, and abuse. Probably the most simplest thing, Peter, that I've seen is these office buildings that are vacant. Like 20%, I think, by some estimates, of simply have almost nobody in there. And you could obviously consolidate that. There's an office building right next door that's 30% occupied, and they're doing things like that. And I don't see a lot of pushback for that type of thing. And to me, that's the low hanging fruit that we can all agree on.
I agree. I mean, this is very, very doable. Stylistically, how it's being done is a whole different story, and where it's being done. But can they cut $1 trillion? They can. I mean, this is definitely possible. There's a lot of easy ways to do it. I don't know that they're taking the easy way right now, but there are a lot of easy ways to pull this off.
Yeah, the approach seems to be like a tech startup, the old saying, move fast and break things, that type of thing. And let's go to question number two on that point. Perhaps I would suggest they're moving too fast, at least with saying how much they're saving. So
Yeah.
they're throwing out this number now. It's 65 billion. Last week it was 55 billion. And that would be incredible, Peter, if that were true and it's only a month into it. And maybe it is true. The problem is if you go to the website, you go to doge.gov, they have this wall of receipts and it simply doesn't add up to anything close to that amount. So that begs the question, do they not have the data yet? Is this being inflated? Is this actually accurate? And I just put the question to Grok, which is the X AI, is it accurate? And it just simply says it's difficult to say. It's difficult to verify. We just don't have the data yet. So I'm hopeful that these numbers are accurate, and I don't want to lose that momentum that we just talked about. There's broad support, consensus that we need to do something about it. But I'm not sure why they're in such a rush to say they're saving this amount if they don't have the actual thing. If you're saving $10 billion more than you did a week ago, where's that 10 billion? Just show it, or hire someone to find that receipt and put it on there. So there's a lot of brilliant engineers working on this project. Maybe they just need to hire a few people who are good communicators that could break this down and make it very simple. This is what department it's being cut. This is how much from each department. Is it all this year, Peter, also? Is it spread out over multiple years? There's
Right.
just a lot of questions around it.
I think that's probably where the inflation aspect of where the made up aspect of this comes in. Like Rock says, they've cut what 8 or 9 billion, but in reality, like Elon saying it's 86 billion, maybe it means over the next 10 years. We've saved
Yeah,
86 billion. It definitely doesn't add up yet, and also they're not subtracting the stuff they're spending that's new. Like we've made a big military grant right now, and I don't see that being subtracted from the money that we've saved here, right? And so
good point. Yep.
it's definitely not adding up yet.
Yeah, so I guess the proof will be in the pudding when we see the actual numbers for February in terms of government spending and receipts. Is it going to start to show an impact, or is it going to take time for this stuff? But show me the receipts. It's like that old Jerry Maguire, show me the money.
Right.
Show us the receipts. Stop putting out new numbers until you triple verify them and you have the actual data to support it, would be my request here. But hopefully these numbers are accurate, because if they are, we're well on the way to obviously solving the deficit problem if we're already only a month into it and we're at 65 billion. Okay. How will Doge, the cuts, impact the economy, Peter? This is probably the biggest question for markets, and we're getting this from investors. And there's a lot of different ways you can look at this, right? The bearish way is to say we're cutting all this money that was going into the economy. You could say yes, a lot of it was wasteful, but it was still going into the economy somehow, and we were borrowing it, Peter. So the impact would be felt years from now, but that was in some way adding to growth. And obviously, if there's going to be massive job cuts, we don't know the exact number in terms of how many federal employees will be terminated, but it's going to be significant if they lose their job and they can't get a new job, right? Is that going to also impact the economy in a negative way. So the big question is this enough? And I don't think we have the information, but is this enough to tip the economy into a recession?
Yeah, I think it's interesting because I think the way to think about this, it's hard for people to understand. Well, the deficit's bad. We're going to solve the deficit problem, and that's going to be bad for the economy. So let's like pretend we've got a household,
Yeah.
and the household they make 100,000 a year, but they're spending 300,000 a year, and they have a chef that's full time. They've got you've got a landscaper that's full time, and you've got a nanny that's full time, and you're employing all these people, and you're living large. But every month, your credit card debt goes up and up and up, and now you got 3 million of debt. Well, we know if you keep doing what you're doing, the outcome is you're going to be bankrupt, right? The house of cards is going to collapse. So we have to fix it. So what do? We say, hey, look, you've got to tighten your belt. We can't do all of these things. So what do? You no longer have someone making your meals full time. You no longer have the full time nanny. You no longer have the full time landscaper, and you solve your long term problem. But what's happened in the short run? Well, there's a little recession happening there, right? There were 3 people that had jobs yesterday. Your nanny, your landscape, these people don't have jobs today. Now, is there so much of that happening that all those people are no longer going out to eat and going to the movies and going on flying Southwest Airlines to go somewhere, and it drives the economy into recession? That's possible. So that's what's happening here. So is it possible that this will create a short-term recession? It is possible. Now, how severe could it be? It doesn't feel like it could be very severe because unemployment where we're starting is at historic lows. So we're at the lowest decile of where unemployment normally is. In other words, it's a very tight market. So most of these people in this household that get let go would be able to get jobs elsewhere. In the bigger picture, many of these people that might lose their jobs or less spend, it doesn't even have to be losing jobs. The government spends less on weapons, then these weapons manufacturing companies are going to sell less. They might keep their staff and their stock price is going to come down a little bit. All of these things feed into a short-term weakening of the economy. But the balance is how severe is that going to be versus catastrophe later? That's the delicate balance that we've got here. I think unemployment is starting so low, it's hard to imagine a severe recession where unemployment is 7 or 8%. Stuff like that does and can happen. We saw it with 08, 09. We saw it with COVID briefly. But it feels like if you are going to have severe cutting, you have to do it in a strong economy, and the economy is definitely strong right now.
Right. And it's all this is assuming that the government is the only piece of the puzzle, right? The private sector obviously is much bigger.
Yeah, you need the
Employs many more
strong private
people.
sector, yeah, of course, to make up for it.
Yeah, and it's that you could paint the worst case scenario, but there's also a scenario where you're saying, well, this money was just simply wasted. A lot of it was going overseas, or it's simply in the long run is going to actually create a better outcome because it's going to be invested in more efficient way. But in the short run, no question about it. If there's just if we're borrowing $2 trillion, Peter, and we're spending it today, even if half of it is wasteful, that other half is going to, in the short term, lift the economy. If we're cutting 2 trillion immediately, I think no question you would likely see a hit to growth. But I'm not I'm not sure we're going to get anywhere near that 2 trillion number. We're at maybe 65 billion if you believe that number, and I think it's definitely questionable getting to 2 trillion, getting to something significant where you're actually balancing the budget. That's going to still be a tall order in my estimation. And the other side of this, Peter, is no one's looking at the benefits, let's say, of reducing the deficit, reducing inflation, and what that will do to interest rates. And we're starting to see it here where the 10-year Treasury yield in early January was high as 4.79%, and now we're down to 4.3%. And you could argue different ways. Why is it going down? But I think one of the reasons is the expectation we're not going to have as much supply in terms of new debt issuance, and that inflation will come down because of some of these measures. That may or may not be true, but if that's actually the case and Americans get relief on the interest rate side, well, that could be stimulative to the economy.
Yeah, 100% agree.
Okay, so it's a complicated question.
Yeah.
Right. For now, I wouldn't say be very worried about a recession. Could there be a growth hit, a slowdown? If there's a $2 trillion reduction, no question, but we're a long way away from that today. Okay, number 4 here, the DOGE dividend. Peter, I was a little bit surprised to see this, but maybe I shouldn't be. Is it realistic that this could actually go through? Is it a good idea? And what they're talking about is okay, if we save um, $2 trillion, let's say, if we actually save it, which is, I think, the stated goal by some people. If you save 20% of that, you get 400 billion. You push that out as a dividend, give it to taxpayers. They're talking about $5,000 per household. Is that a realistic thing that you think will go through? And is it a good idea? I'll give you my thoughts, but I want to hear yours
I
first.
don't think this is crazy. I know I don't think this is great, but I don't think it's going to happen. But I think what's interesting is if for every dollar you save, you took 80% and paid down the debt and 20% gave it to Americans, we would suddenly get a lot of buy-in. So politically, it's interesting.
Hmm.
Economically, it's not great. I mean, economically, it should just go all to paying the debt. What's interesting is in this proposal, I think it was 20% back to Americans and like 30% to the debt or something. And then where was the rest going? They didn't explain where the rest is going. It was just redirected spending does nothing for the deficit. So I'm kind of fascinated to learn more here. I don't think this will happen, but it would be politically an interesting maneuver. What are your thoughts?
My thoughts are, until we actually balance the budget,
Yeah.
you're simply borrowing to give people a stimulus payment again. And if you're saying you want to reduce inflation, well, I think that's going to counteract that. Obviously, we're not at a balanced budget anywhere close to that. I guess if we did cut the 2 trillion, now we're there, but we don't have this massive surplus at that point in time. So I have a hard time rectifying that. The idea that you should immediately be sending. I love the idea of lowering taxes. I'm always in favor of that, but not with this type of deficit. And to me, it's just a tax cut, calling it something different, right?
Yeah.
You're actually front loading it, right? Saying you're going to give people the money in advance as opposed to lowering the rate and they get it over time. So um, I think it would be tough to pass something like this, but as an incentive, like to find that waste, fraud, and abuse, to say like this is the people's money and it was squandered in wasteful ways, and if the people deserve some of that money back, I agree with that concept. I just don't think if your goal is to reduce the debt and the deficit, make this less a it's not the time to say like mission accomplished. Let's start sending
Right.
money out just yet. And that ties in with the fifth question here, Peter, because up till now we're just talking about Doge, right? And there's only so much Doge can do. And you and I talked about it before it started. My big question was, well, how much can they actually do? And I've been surprised. I didn't know there was that much discretion for Doge to make these kinds of cuts. I guess what they're essentially doing is reversing a lot of the discretion that was going on in the years prior in terms of building up these additional expenses. But that was a big surprise to me. I thought more of this would have to take place through the House and the Senate. But I think that regardless of how much Doge is going to cut, the real big cuts, if we're looking at defense spending or we're looking at healthcare spending, it's going to have to come through legislation. And we got a little peek of the House bill that just passed yesterday. And to me, a lot of people are focusing on 2 trillion in spending cuts over a decade. That's 200 billion a year. That doesn't get you to a balanced budget. But to me, the eye-opening stat was, well, there's 4.5 trillion in tax cuts over 10 years. They didn't break that out yet in terms of how much of it is just extending the 2017 cuts versus expanding with new cuts. But you could paint the scenario, Peter, if depending on how the Senate comes back with their input, where the budget that's passed doesn't see a huge cut in that deficit, because as we talked about, it's very difficult to take away these projects at the end of the day. And this was passed, Peter, by just a very small margin, 217 to 215. What do you think here is likely to shake out here in terms of what the House and the Senate are going to do on this?
I find the direction, very disappointing because it basically looks like you had all this talk from the incoming administration about more responsible proposals, and here you have the first proposal adds to the deficit. I mean, like the very first proposal. So
Yeah.
it's just,
Like they're asking literally for a $4 trillion debt limit increase. So they're essentially saying we're going to need more
right.
debt.
Yeah, not only proposing something that makes things worse, but then trying to lift the ceilings in anticipation of making it many, many, many more fold worse. It's not this shows a lack of seriousness about really tackling the deficit. It makes Doge look like a big show. So this is just it. I don't see a solution here because you basically have this as the proposal of the majority, and the minority seems largely on board. And so we have this whole new thing. It happens, feels like not every election cycle, but every couple election cycle where we're talking about balancing things, and then boom, right out of the gate, we're not even 45 days in, and the
Yep.
first proposal is to increase the deficit.
And the counter to this, Peter, though, is what they usually say, which is we're going to make it up with growth, right? We're going to
Yeah.
grow so much because of this that the deficit will be eliminated that way. That didn't happen after after the 2017 tax cuts. Growth was fine. I'm not saying there wasn't economic growth and some benefit from it, but it definitely didn't erase the deficit. It actually expanded it. So you really have to think that GDP is going to go up to 4%, let's say, to say that you're going to generate way more tax revenue and grow your way out of it.
Yeah. Agreed. We'll see where this goes. It's going to be an
Okay.
eventful few months.
Yes. Well, you said we're going to find out in the first 100 days if they're serious, and there are
Here we
some
go.
signs that they're serious. There definitely has been the first big issue in terms of DOGE and moving fast, but this is going to be the big one, and we'll see. There's nothing finalized here, so we'll see how it ends up, and we'll discuss that when it does. But there has to be, I would say, a broad support. Otherwise, I'll come back to that thing I was saying before the election. If you put all these cuts in without broad support 4 years from now, or even 2 years from now, that could be reversed. So try to get consensus, try to get low hanging fruit in terms of these cuts, and try to make it something that's a sustainable path to cutting that deficit. So 5 questions. We probably could have did 30, but I think five's good enough for today on Doge. And let's move to signal or noise. Two things today, Peter. One, the fastest signal in history. It's an update. 1 month ago, it was only a month ago, we did the show, I think, right around the inauguration. There was just a crazy mania in meme coins, just a huge increase in supply. And you had the Trump meme coin launched just before the inauguration. That's now down 83% from its peak on January 19th. You have our old friend here, Fartcoin, which a lot of people were debating me on X. I did not engage with them, but saying, you don't know what you're talking about. This thing has momentum. It has real value. That's down 90% from its peak. And the Mania coin takes the prize here, down 93%. And I was talking yesterday, I did my weekend charts. You can actually, Peter, this is the craziest thing. You go to the site for this, and the first thing that they have on the website is click here to buy this coin on your credit card, which to me, just
Unbelievable.
the worst, the absolute worst. So
Terrible.
the people who could least afford to lose this amount are buying it and putting it on their credit card. Just crazy to see.
Incredible, really, and super disappointing. And it came out around the inauguration, too. I mean, maybe on inauguration day, just not good.
Yeah, as we said, it was a bad look in every way, and I'm not sure who advised them to do it, but definitely not a good decision. Okay, let's go to diversification here, Peter. This has been the number one topic for investors over the last decade. We know that big dominance, US versus the world, 16 years running of outperformance, and we have growth to value. Similar streak here of outperformance ratio at its highest levels since March 2000 entering the year. We're only 2 months into the year, so I don't want to make too much of this, Peter, but I do have advisors emailing me saying, Charlie, is this finally it? Is this finally going to be the year where diversification pays off for the disciplined investor? And so far, pretty good, Peter. We look at international stocks. The MSCI EAFE ETF up 8.5%. MSCI World X US ETF up 7.3%. And then you have the S&P 500 up 1.4%. It's been a long time since we've seen the S&P in this right column here in the bottom third of countries and regions in terms of performance. What do you make of international stocks? It's only been 2 months. Is there a possibility that we're going to see international outperformance, which is really what people least expected. If you remember, we talked about the post-election reaction where the U.S. stock market surged higher, international stocks sold off. Well, all of that has reversed. All of that outperformance, underperformance has actually reversed.
It's incredible. I mean, 2000 to 2010, which was the very beginning of my career, the S&P 500, as you know, large U.S. stocks earned 0%, just incredible. And everything else, international emerging markets, did much better. And then just like the flip of a switch, the beginning of the next decade, international just crushed everything else. Now, everything was positive for the decade, but U.S. did better than everything. And at the turn of this decade, at the beginning of 2021, Goldman Sachs, BlackRock, Vanguard, all releasing reports that they think over the next decade, international was going to do better than the U.S. And of course, here we are, almost halfway through this, and that's not happened at all. And we keep waiting for this rotation. 100% of the time, the rotation happens. 100% of the time, you don't know when it's going to happen, and it can be swift. We saw a false start. I don't know if you remember this, Charlie. I think it was the beginning of last year, where either the beginning of last year or the year before, where international really did better than the U.S. for a considerable amount of time. I don't know if it was a quarter or 2 quarters, and then it all flipped. Could this be it? I mean, you're talking about a very wide spread now, a very wide spread. And the gap is the highest it's been in history in terms of valuations. Now,
Yes.
some people would argue it's justified, AI revolution in the United States and so on, but biggest gap in history, long overdue. The answer, of course, is I don't know. Nobody knows, but it's off to an incredible spread of a start.
Yeah, that's the right answer. And that's why you diversify in the first place, because we don't know. We don't know when another 2000 to 2010 is coming. It could be today, it could be next year. We just don't know, and why you have to diversify in advance. But digging into that U.S. performance, Peter, we've talked about it. What's been driving that outperformance in the last decade is primarily large cap U.S. growth stocks. And so just digging into growth versus value here, you can see the differential. Large cap value of 4.3%. You got the S&P 500 1.4%, and large cap growth stocks year to date here, again, only 2 months in, are actually down a little bit. So that would really be, if there's going to be a reversal, it will have to come from underperformance of the Nvidias, the Amazons, the Googles, the Microsoft. Doesn't mean they have to crash, but if they're just don't do what they did in the last decade, they have a slower rate of growth and their valuations start to come in, you could see potentially this rotation persist for a little bit. It wouldn't be shocking to me, is what
Correct.
I would say.
Long overdue.
Okay, so we'll see what happens there. If you're watching this and you're looking for a second look on your portfolio or financial plan, reach out to us today, creativeplanning.com/Charlie. Fill out this form for a free wealth path analysis. At Creative Planning, we're in all 50 states, so we likely have a location right near you. Over $345 billion in assets under management and advisement. We're here to help, so reach out today, creativeplanning.com/Charlie. Thanks, everyone, for joining us. If you're watching this on YouTube, hit that subscribe button, and we'll see you next time on Signal or Noise.